Climate change is placing strong pressure on companies to reduce their environmental footprint. In this context, firms increasingly turn to corporate venture capital to access the green technologies developed by entrepreneurial startups. My research explores how corporate investors can use ambidextrous corporate venture capital strategies to capture green innovation and ultimately improve their environmental performance. The study examines 126 American corporate investors over 20 years. It focuses on ambidexterity, which refers to a firm's ability to combine exploration, investing in radical new technologies, within exploitation, which builds on existing capabilities. We analyze three approaches: static ambidexterity, dynamic ambidexterity, and the combination of both. The results show that ambidextrous corporate venture capital investments are a powerful gateway to acquiring green innovation. Dynamic ambidexterity, where firms simultaneously invest in both similar and very different business models, has the strongest positive effect. These companies generate more green patents and their patents receive more citations. Balance within a period also supports green innovation, but the most effective strategy appears when balance coexists with high dynamic ambidexterity. In other words, firms benefit most when they integrate both static and dynamic approaches, creating a synergetic effect that enhances their capacity to capture green technologies. The study then examines what happens after green innovation is acquired. The evidence shows a clear and consistent link between green innovation and environmental performance. Firms that generate more green patents significantly reduce their greenhouse gas emissions, and this improvement persists over time. Green innovation becomes a measurable driver of environmental performance. These findings offer several managerial and regulatory implications. For managers, ambidextrous corporate venture capital strategies help respond to stakeholder pressure, avoid market penalties linked to emissions, and strengthen long-term competitiveness. Integrating exploration and exploitation in corporate venture capital portfolios allows firms to meet regulatory expectations while building profitable and sustainable business models. For regulators and governments, the study highlights the value of supporting ambidextrous corporate venture capital investment. Incentives such as subsidies for green startups, tax credits for environmental investments, or innovation sandboxes can encourage firms to adopt cleaner technologies. By facilitating the acquisition of green innovation, policymakers can accelerate the transition toward lower emissions across entire industries. Overall, the research shows that ambidextrous corporate venture capital strategies create a strategic pathway for firms to innovate, reduce emissions, and remain competitive in a world increasingly shaped by environmental challenges.